Okay.
We have to fix what we know is the problem. So before I teach you my style, before I teach you anything, I need to know what are you struggling with.
Now I'm struggling with entries.
Entries. That's
Is my mic okay? Can you hear me clearly?
Yeah. I can hear you.
Oh, okay. Yeah, so now I am inconsistent because I struggle with entries. I don't really, like, I would see a trade and understand if it's a buy or sell, but the entries part,
Yeah.
Yeah.
I'm gonna fix it. I don't think your problem is entries. I think your problem is you don't have a plan for entries. You don't have a plan.
Yeah, that's the problem.
Yeah. So entries are not a problem. Once you know your strategy, you'll follow it and it will help you. So let's get to it. Né?
Okay.
It means I have to focus on entries before I teach you anything else. Né? But before I teach you entries, you have to understand 3 things. Write them down. You have your pen, né?
Yeah, I do.
You have to understand the condition of the market. You have to understand the entries, the stops. Understand?
You said condition and what?
Your conditions.
Your
entries.
Yes.
Your targets. And stops. I call it a zest strategy. So is conditions, entries, targets, and stops. Okay. So your conditions, you have to know condition of the market, whether the market is in an uptrend, whether the market is consolidating, whether the market is in a downtrend.
Yes.
These are the conditions of the market that you must know. Firstly, before doing anything in the market, before you're looking for entry, before looking for anything, you have to look for conditions, right? I think this you took out of the way, and then you look for entries. Let's say your market is in an uptrend. If you have your conditions, you know that the market is in an uptrend. I'm gonna wait for market to pull into this level. Give me a double bottom here, and then I enter the market. These are entry reasons, but then we'll go through it. I'm just showing you now this strategy here. Fine, and then now that we've got the reason for entries is double bottoms and double tops, we're going to look for targets. And then you say, from this double top or from this double bottom, my first target will be my first high. This is my first high. You entered here, you hit your target here. And then your stops, you're gonna determine them by saying, okay, because now I'm gonna be, because I usually use an ATR. You see this thing here?
ATR, yeah.
Yeah, I normally use an ATR for my stops. I say the previous candle, if the previous candle was on 7, 2, 9, what, I take this number and add this number. If I'm buying, I add this number. If I'm selling, I subtract this number from this number.
Okay.
But it's an advanced thing, but I'll teach you when time goes on about it. But for now, let's say your stops and targets, you say, maybe let's say this market did this and give us a high low. Then you say, my target is below, is on this low. It's your reason. You understand?
Yeah.
So once you have all these 4 reasons met, you're not going to lose in the market the way you lose, because you understand the market and you know what to look for. The problem with many people, they don't know what they are looking for. You see now the market is here, né?
Yes.
A person would just open this chart and say, oh, this market is selling. You don't know why you're saying it's selling, just because the market is on the downtrend and then it's giving maybe a black candle. You say you sell. You don't know why you're selling. Understand? But then let's just make a quick live. Let's apply that strategy that we just assessed strategy that we just talked about. On the daily.
Okay.
On the daily, we look for conditions. Firstly, I'm going to attach my trends because I know always I have to know what is the trend.
Oh, yeah.
I'm going to connect all my lows before. See?
Yeah.
I'm connecting all my lows. See clearly. So this low, I attach the week, the touch of the week, I attach weeks here. You see it?
I see.
Then I take this to the other side to confirm my. You see, this week is touching, this week is touching, this week is touching. So 2 touches already telling me that this trend is right, it's a downtrend. Is it a clear downtrend?
It's a clear downtrend, yeah.
Yes, now we know that the market is in a downtrend, right? So now what we're going to look at is structure. What is the market doing in this downtrend? It's structure. So I'm going to take the current market conditions. So I'm going to just say, let me see here. And I can find it. Do I find it? Support. Use it. So I'm not going to use this one. Already you have to look for it. You understand? So
yeah.
Here we get the resistance. We get the resistance. Even if it was broken, we test it. So now I know that this area here is a valuable area.
Yeah.
That many times. It was a support and into resistance now. So I think this area for current market. But looking at it now, I missed the trade because this market is gonna push down, if not to this area. Understand?
Understand.
To fill in the support trend line. Understand?
Understand.
That's the first thing I have to look at. Its conditions and whatnot. So with that said, I'm gonna go to a lower time frame now to look for entries. I've got my conditions. I know the structure of the market, right? Now we go to 4 hours because we're on the daily, right? We're going to 4 hours now. On 4 hours, we look at it like that. Say, okay, I know the trend is down. I know there's this resistance here. Then you restructure it because of now you know your conditions. You say, now I'm on 4 hours. I do the same thing now that I did on
the daily.
You see, I connect all my lows on the weeks. Fine. You connect this trend line. Connect to your upper side. It doesn't connect to anything, but you keep it on the week. Let's see. Yeah. But it's fine. You can put it on the week there. So what you're looking at now is the market that is exhausting, getting exhausted here. So we've got this area. Market has reached the trend line support. So you know that market might push up now to a level where it has to meet with this level. Yeah. Understand?
Understand.
So what you look for is another resistance from this support. So I'm gonna say This is the first resistance. It's where you might want to take your first profit. Because of now, what the market is giving us is a buy. It's a buy. Because I'll tell you just now, but I just want to show you this. This might be your first intraday target if you want to take it for the day. If you don't want to swing it for a week or something, this might be your first target. You buy here because it's a double. You got a double bottom already. You remember when we started, you say we're looking for double bottom.
Yeah.
So the market gave you one, went up, it's coming back. It's a double bottom. You buy it. Then your first target, as we said, is the first high. This is the first high.
Yeah.
Remember. So this is the condition. Already we met two things. Now you're not struggling with your entries. You're not struggling with your condition. You got its entries. Immediately when you enter here, immediately when you enter on this double bottom here, there's no way, if your stop loss is here, it's not gonna get hit because already your conditions, they told you that every time when a market gives me a double bottom, it pushes up. So you put your stop loss and ATR below. So let's say an ATR below. An ATR below, you're gonna take this candle. You see this last candle here.
Yeah.
You look at it from this side. You take the number. You do this. You close this last candle here. It's the opening of this candle, right? So you see it's 4, 6, 7, 8, 3, 9.
9, 8.
You see it, man?
Yeah, I do.
So I'm gonna take that for something minus this number.
11, 9, 8.
Yes, it's gonna give me my stop loss. It's gonna give me my stop loss. It's gonna give me my stop loss. If you minus it, then you know the level of the candle. It's basically what ATR does. It gives you the volume of the moving candles, so you know the candle has moved 11,989 points. This one. So it means if your stop loss is below it, it has to move like this candle. Then you know you are safe or you are not safe. Then if the market takes you out, you are wrong. But now you can also have another rule of saying I'm taking profit on the second high. It's your other rule. This is where you can take your profit. So it will come here and test this resistance trend line. So that's how easy it is for having conditions, entries, stops, and targets. You see, I taught you this thing in 2 seconds. But if you know how to look for it, you're not gonna miss it. So I need you to write it down so that you understand it. See, because the problem with many people, they don't follow rules. They don't write them down and follow them. Understand?
Yeah, I understand you.
So that's one thing I wanted to share with you. It says,
and your entry in this case is gonna be on the 4 hour.
My entry would be on 1 hour. Okay, let's go to 1 hour. Because the 1 hour would give you, but on this one I would enter because 4 hours doesn't have a lot of noise, ne? You see 1 hour it has a lot of noise. So it's a double bottom, but it's too much noise. I don't like having such noise. But it's proper entry also. You entered on this other candle here. Then it's a proper entry. It's gonna go up with these levels. It's gonna push high. Understand?
I understand it.
There's no difference between entering on the lower level, on the lower time frame. There's no difference as long as you know your entry points. You see, let me take you to 4 hours with this. You see, even on 4 hours, I did leave that block, but still it's here. It doesn't matter if you enter on 1 minute, but as long as you know the area where you're gonna enter, it's the best thing. But 4 hours, it's clear because of, you know that the close of the other candle, it's where you're gonna enter. Let me just show you this simple one. Where can I find it? Here. Let me show you this one. Yeah, this one. This one right here. You see it?
Yeah.
Yeah. Yeah. Here. So on 4 hours, if I got this double top, I knew that this candle, when this candle here closes, the second one gives me a clear entry, a very clear entry with the same level. So if I got an entry on this one, you see how clean it is. It's very clean.
Yeah. Yeah.
And my stop loss above this previous one. Though it was not hit, but I got the entry, and look at the market went down. Came back, didn't even touch, push down. We did have this, I think you saw on that free group, we did have this trade. It was a good trade.
Yeah.
So my stop losses are very tight, very, very, very tight because of how I know what to do, my conditions and my my rules. Because I know if I entered here and then market breaks up, then I'm wrong. It's a wrong trade. I close. I know that, okay, stop loss hit. I'm gonna wait for market to do another thing that I'm expecting. Maybe let's say market goes up, touches this level, or touches maybe that level here, and then comes back to this level here. Then I would say, okay, now we're in an uptrend. I'm gonna look for double bottoms here to go to this level.
Yeah.
See how easy it is to look at structure and market. So you have to plan ahead and you have to always follow your rules. Always follow the rules. You know, because this strategy works very well. It's your conditions, your entries, your targets, and your stops. Once you have all these things lined up, trust me, you're not gonna lose in the market. But once you enter anywhere and everywhere, you just place trades and what, then that's how you lose money. And as we see now, look at it, it's a live market, but then it's rejecting, it's gonna push up. See?
Yeah.
The signal I gave on that group now, on our premium group. See?
Yeah.
So I don't know if you have any other questions.
So far, I don't. At the moment, I don't.
So what is it? What's the other thing that you would like to learn? Okay, let me teach you how to find levels then, if you would like. So how you find levels, you look at the current market. You don't just place levels everywhere. Here, you don't just place here, you don't just place maybe here, don't place here, don't place maybe here, don't place here. No, this is not what you do. So how to find levels, it's another thing that many people are struggling with. So you look at the current market, place your level at the current low, which is here in this week, and the current high, which is here. These are the levels that are more important than any other level in this market.
Mm.
You see how clean they are?
Yeah.
This is where you would want to trade inside here. So these
Inside
are,
this one.
yes, these are the only two areas you put on your chart. But trend lines, you can put them. Trend lines are not problem. You can put them anytime, you see.
Yeah.
So, but these two areas are important. So you know that market from this area, it pushed down. It's the recent, and then if you look left, it was rejected once, it was rejected twice, 3 times. That's enough. You don't have to go back and look.
Yeah.
Because you know that it is an area of value. No?
Yeah.
Yes. So what you do now, you plan your trade inside these two zones. So let's say you found this entry fine, you entered a buy here, then the market is going to do this, come to this area here, and come back here, this one. Then you're going to say, okay, I'm going to re-enter again here. Get
More entries.
You enter again, get your stop loss there. It's going to push up then, comes to this area. Market pulls back into this area, into this one. You enter again, market push up to your level. So already you see how many entries you got. You got 1, 2 entries plus this entry. This can give you a simple, let's say $1,000 if you're using proper risk management. Because if you have 2 trades here, maybe let's say they give you $100 to this area. You enter another one, they give you $200 to this other area. You already have $600. You enter these two another, they give you $200 to this area. It's $800 in one trade.
Scaling, maybe you scaling twice or
you don't scale. You don't scale out. All your trades, you don't scale out. What you do, you enter here.
One position.
Scale out. What you do when the market pushes up to this level, you take your stop loss, break even, entry.
Only entry.
Then market comes back, right? To enter. You enter that double top, that double bottom, it moves high. You take your stop loss to the stop loss of this entry. Because if here you've got your stop loss here, you enter and you've got your stop loss here, you take this entry here, this stop loss to this stop loss. So you've got 2 stop losses here. The one that is winning and the one that you just entered. So market comes back, full bottom, which is high. You take these 2 stop losses to the new stop loss that you have already had. So you're still winning on this trade. You're not scaling out. You go with it until your target. That's how trading is. Scaling out is for people who don't know what they are doing in the market, because you scale out once you're not sure about what you're doing. But if you are sure about what you're doing, you're not going to scale out because you know the odds are with you. So once you scale out, okay, let's say the market you entered, you scale out here. You took $20, but you find out now momentum is high, just go up immediately. You lost $200 for $20.
Yeah, that's also another problem.
Yeah, that's why people are scared because of you don't know what you're doing. You scale out this. The people who scale out in the market are the ones that don't know what they are doing. Once you don't know what you're doing, then you're gonna scale out. But once you have your stops, your targets, you don't touch the market. You know what you only do, you manage your trade. That's the only thing. After you enter, you manage your trade. You entered here, you entered on this area, not scaling out. Market pushes up, take your stop loss, put it to break even. That's management. You're managing your trade.
So either it hits your stop loss or it runs to your target.
Yes, it can hit your stop loss. You never lost money. It's break even. You don't care about it. You look for another possibility. You look for another possibility. Okay, let me give you a scenario of that. Okay, market comes here.
Yeah.
You move your stop loss, get taken out, right? Market does this, go down to this area. If it's still a valid trade because it's in your zone. And the market gives you this.
Doesn't break on that low.
And gives you this, and then you enter again here. Stop loss, you put it the way you put it, and then the market gives you what you did. You're still in a good trade. But as long as the market is going to do this, if you entered here, market does this, and then it does this, then you are wrong. Understand?
Yeah.
Then you know that you change your bias. You're gonna look for something like this.
For the retest and then sell.
Yes. You see how easy it is to look at market.
It is easy. It's just the emotions part.
Impatient, and then you're not following rules. But once you get that zest, once you get this, trust me, you're not gonna struggle, because this will help you with everything.
And then your entries part, is it always a double bottom, or maybe there's something also that can be expected?
On Vix75, it's only double bottoms and double tops on Vix75, but they are different markets. Because Vix gives me, look at this. This is a double top. This is a double bottom. Look at this. This is an entry. So I'm going to give you most entries. See, by just looking at them, this is an entry. This is an entry. This is an entry. So I had a lot of entries in this area. I can make a lot of money around here immediately by just looking 1 second, because I know what to look at. You know?
Yeah.
So that's what I'm trying to show you.
Okay, I understand. I get.
So, but there are different types of markets. VIX 100 is not the same as 700, VIX 75. But we differ as traders. Let me show you something. Some traders will trade breakouts, right?
Yeah.
So some traders will trade breakouts. Here's a breakout. It's a pattern, the flag. A person would enter here.
Yeah.
And they are still right. You see, this is a breakout. So we are different traders. A person is still a valid proper entry. So, but then you see, I don't have, okay, here is another one. It's a breakout, you break. But then you don't get much of these things. Okay, here's a break. So, but you take long to get these things on this market, on VIX. It takes long for you to get these things. And then if you entered here, and then where would you put your stop loss? You see, you have to be higher. Yeah, it's a difficult thing for you if market does this. You're gonna be scared because of you're gonna be in red for a long time. So I know with double tops, here's a double one, here's another one. I know with this, I entered here, it's not gonna be a very long time into rates. But if it's in the red and then it goes up and I know if it takes me out, I'm wrong. But if it doesn't take me out and it does, I entered there and immediately it's a double top. The double tops immediately, they go in that direction. Double bottoms immediately, if I entered here, immediately it goes up. Immediately, you see. I don't have to wait. I don't have to worry and say, my market is in the red. I don't have to lose now. What am I gonna do? No. I entered here, got profit immediately. I enter another double bottom, got profit immediately.
Yeah, I get you.
Yeah. So that's why I only use double tops and double bottoms on Vix, but not on all markets, of which I will teach you when time goes on. Because we have just 10 minutes, 7 minutes now.
Yeah.
Yeah. I don't know if you have another questions.
No.
You're satisfied.
Yeah, I understand so far.
Yeah. What I'm gonna teach you maybe on the other session is about psychology. How to not be scared of holding trades. And but my strategy will help you, because if you take a look at it, you entered here, it's a double top, double bottom. You entered here, already it goes into blues. It helps you with psychology, because most people have fear when, but I'll get into that.
The retracement part,
Huh?
The retracement part, it scares people,
Yes, that's what I was trying to tell you. I was saying most people are scared of such things, but then it's where I'll teach you how to manage such things. Because even here, yesterday we entered here, and then you see we went up and then it retraced, but still
retracing.
Yeah. If you are scared, you're gonna get out. I'm still in this trade even today.
Yeah. Okay, that's the trade you're in. Okay.
Yes. You see?
Okay. So
I'm gonna hold it until it takes me out or it goes my way. No need for me to fear. And you don't have to look at the market every second. The reason why I enter on 4 hours, I avoid looking at the market every minute.
The noise,
Yeah, the noise will make you look at the market every minute. So now here, you can take 4 hours without looking at the market. You entered here, the one candle is 4 hours. So our South African time now is 9:41. At 10, another candle is gonna open here, of which I know it's gonna be a bullish candle because of looking at this current candle now.
It's rejecting you.
It has buy pressure. You see, there's too much buying pressure here.
I see. Yeah.
So the next candle that's going to open, it's a validation that the market is going up because it has too much buying pressure here. There's too much pressure of buying pressure.
So when you enter, do you go to go 15 minutes? You don't go there. You enter on the
I enter on 15 minutes. I do, but I'm saying my main entries, I do them on 4 hours. Okay. But if I don't find a reason to enter here, I would go to 15 minutes to validate. Okay, let me check and look for my.
Yeah, because I was going to ask if I should also enter, if I should go to the lower time frame to see.
You see, this is where you should enter. This is where you can. This is where I would have entered if I missed.
On the lower time, the 15 minutes,
Yeah, this is where I would have entered because of already the higher time frame confirms that this is an area of value. So this is where you would enter. You see, even now, the market comes back into this area. You enter still. You can still enter if the market comes back to that area. You just put it like that, and you wait for the market to come to you. You don't force the market. Let's say it's like this. Market does that, comes to this area. You can still enter here.
Okay.
You see?
Yeah.
And your stop loss below this one. Stop loss below this one. Yeah.
Okay.
Then you're safe.
Okay.
15 minutes is just to confirm whether what you see on a higher time frame is valid. It doesn't mean it has to be your entry chart. It's not an entry chart. You can enter any chart as long as your setup is proper. As long as your setup aligns with everything, you see. Even on 1 minute, you can enter. Doesn't matter. The time frame is not a big factor. It's not a big factor. Understand? It just helps you to understand what you saw on the higher time frame. You see?
Yeah. Yeah.
So this is the area where you're gonna enter here. Here. If even on 1 minute on this block.
Yeah.
It's the block you put on 15 minutes, right? So you're gonna wait for the 1 minute chart to come to you. You enter here on this block. You don't just enter anywhere, everywhere. No. Just be patient. If the market comes back, if it doesn't, you don't enter.
Okay.
So the time frames, they just help you to understand the conditions of the market. But you can enter, even on the day, you can enter markets. You can still enter on the day. You see, I can still enter here. I know my stop loss will be below this trend line, this horizontal line. So it doesn't matter where you enter the market. It's just that you have to know your setup. Even on the day, I have a double bottom on the day.
Still, yeah.
If you can check it. So it's a valid trade. I have this. See it.
I see it.
So yeah, I think our session for today can end. If you have no questions.
No questions.
Are you happy?
Yes, I'm happy.
If you're happy, I'm happy. We'll just do another one next week. But the whole week we'll be having signals. We'll be having analysis on the premium group. I'll be helping you a lot to understand the conditions and signals. And the signals are powerful. So you are in the right spot. You're in the right place. You learn a lot.
I believe. Yeah.
Okay. I don't know. We can end.